I mentioned before that in Europe we have a European system of accounts alongside the global system of national accounts. And the latest standards are ESA 2010, which is largely consistent with the SNA 2008. ESA 2010 has been adopted in the EU from 2014, while before we used ESA 95 that was in line with the SNA 1993. Why do we use an alternative system of accounts if this is consistent with the global one? There are indeed several reasons. The first reason is that the global system of accounts, as I mentioned before, in some parts could leave room for interpretation. So there are some crucial parts where we in Europe feel that we should provide clearer guidance and clearer rules of how certain things should be interpreted and applied. Another big difference is that the international guidelines, the system of national accounts, are somehow recommendations that countries are asked to implement, but they have no legal obligation. On the contrary, the European system of accounts is a regulation, that is, it's part of the European legislations, and European member states have a legal obligation to follow it. It's a huge book, which, however, is a legal act. Why do we need a legal act for the European system of accounts? Mainly because of the administrative use, which has important consequences of the European system of accounts. The European system of accounts is at the basis of the so-called excessive deficit procedure. This has to do with the compliance monitoring that the European Commission regularly carries out of the debts and deficits parameters of the European countries as established in the treaties. The second main administrative purpose of the European system of accounts is to establish contributions to the EU budgets. The reference parameter for this is gross national income, which is calculated based on the rules included in the ESA 2010. Finally, the European Union offers structural funds to support its poorer regions. And again, the eligibility criteria to access these funds is based on regional GDP that is calculated starting from ESA 2010. Let's now look at the key features of the system of national accounts. The national accounts are expected to show what happens in an economy. But an economy is extremely complex. There are trillions of individual activities involved. There are a lot of interactions between many different actors. Some of these interactions that we call transactions involve money, some don't. So how can we represent in a simple way this incredible complexity? To do this, we need a simple and very logical structure. The idea is that in national accounts is that the source of value is production. So production is what produces the economic value. This value is then distributed to those who contribute to create it. This may be considered as the factor incomes: wages, interest on loan, tax, returns of on equity, etc. The value is then spent or saved or used for investment. It's of course important to distinguish between financial and non-financial part of the economy. The non-financial part of the economy is the production of goods and services, or the wages that are distributed to the remunerated work. The financial part instead does not directly create value, but it is like the oil in the engine. It lubricates the economic system. Without the financial system, the economy would not work. The financial instruments act as a medium of exchange, for instance. Without it, we would still be bartering goods and services, or as a store of wealth. You will often hear speaking about national accounts and financial accounts, but please be aware that the two are indeed part of the same system. This slide represents a very simple sketch of our national accounts model. Here we see mainly three things. First thing is the big blue box. It represents the boundary between our national economy, for instance, Luxembourg or Germany, and the rest of the world. We see that there are import and exports that go from our economy to the rest of the world and the other way around. Within our national economy, that is the elements inside the blue box, we find several elements. First of all, we see the bubbles. These bubbles represent the economic actors. Here we see enterprises that mainly produce goods and services, financial institutions that mainly provide financial services that allow the economy to function properly. We find households who have the key role of consumers. They do a lot of consumption, and the government that oversees has the functioning of the economy, does redistribution, imposes taxes, allows subsidies, etc., etc. And then you see arrows, a lot of arrows going in several directions between the different economic actors. These arrows are the kind of activities that each actor is doing with other actors. You will see the kind of activities more in detail in the following modules. These activities that we call transactions are, for instance, payments of salaries or payment of taxes, transfer of subsidies, sales of goods and services, and so on and so forth. We have seen in the previous slide that the key features of the national account systems include the need to delimit and identify the borders of our economy, to understand who are the economic actors, and also to identify and properly describe transactions of a different nature. There are two additional key features that I would like to highlight. The first one is that the system is built to provide an aggregate view of an economy, a single number. Quite often users want to know, how is my economy as a whole performing? Is it growing or not? And by how much? So the system is built to answer this kind of questions. Of course, to put together all the different elements that contribute to an economic system, we must have a common measurement element. So to put together all the different economic operations, we need to express them in monetary terms. This allows to build aggregate measures such as gross domestic product or gross national income that then can be easily presented to users such as media, policymakers, or researchers. A second key feature of the system is its internal consistency. National accounts, as I mentioned before, takes hundreds of several different data sources and puts them together into a consistent, coherent system. This is very important. Quite often the data sources provide contradictory indications, and then it's the art of the national accountant to make a professional judgment and select the most appropriate data source for that specific situation. I make an example. If I want to estimate the amounts of social benefits paid by government to households, I may take administrative records from the government, but I may also get this information from a household survey. Both provide information about this specific topic. But the data, the results are not exactly the same. So which one is correct? Of course, if we leave this to users, they will be puzzled. So here the national accountant has to intervene. In this case, I may consider that the government records are complete, they are timely, they are recorded at the right moment, so I may consider that these are the right source for this specific element. Another example is a simple purchase of a product. For instance, I want to drink a coffee in a bar. So yeah, I enter and I buy a coffee. And this entails two actions indeed. There is me purchasing the coffee and the bar selling the coffee. So this is a transaction. This transaction has a counterpart that is a financial counterpart. I pay for the coffee and the bar receives the payment. So there are four flows ongoing for basically me wanting to drink a coffee. And these four flows have to be recorded in a consistent way within the system. So each operation, non-financial operation, non-financial transaction, has a financial counterpart. And all these operations have to be recorded at the same time and for the same value. The system ensures that all these different operations have a consistent registration. Let's now consider the aspect of international comparability. As I said, ESA follows closely the system of national accounts. There are some minor differences that concern European-specific issues. For instance, we have in ESA a bit less of issues that are peculiar to developing countries, while we have a bit more on EU-specific issues. I must say, given that ESA is a regulation, the comparability of national accounts data within Europe is very, very high. We spend a lot of time and resources checking that the member states correctly apply ESA data. And there are also some non-EU countries that follow ESA. For instance, the EFTA, the candidate countries. We don't check them as regularly and thoroughly as the EU member states, but they follow the same system and their data are comparable with ours, fully comparable, I would say. However, our European data are also comparable with those of the main developed and biggest economies like UN or Japan.
the USA or Japan. And this because, as I said, ESA closely follows the SNA, that are the international standards. They also may have some national adaptations of the international standards, but nonetheless, on the main aggregates and main concepts, we are all fully consistent. So for the main aggregates, such as GDP, these are surely highly comparable. But you should be aware that about 1/3 of the countries in the world still apply previous versions of the System of National Accounts, of the SNA. These are mainly developing countries. There are two issues here. First, as I mentioned before, implementing a new version of the SNA is very burdensome. And developing countries may not have capacity to do that. And at the same time, it may not be so relevant for them because their economies are less sophisticated. So, for instance, the new features concerning the financial system that the 2008 SNA has introduced are not very relevant to several developing countries. In the end, even if they do not implement the latest version, this has limited effects on international comparability. However, if you use data from those countries, you should be aware that they are using a previous version of the SNA, and you should be cautious when you interpret the data. I would now like to attract your attention on the issue of revisions. Revisions give big headaches to users because, yes, national accounts data are changed over time. And of course, this is very difficult for users to manage. Think of an economic analyst or a policymaker who makes some plans or draws conclusions based on some data, and these are changed after some time. And once the new data are applied into the economic models, this may lead to different conclusions. So why are these crazy national accountants changing the data all the time? Actually, the revisions are a means to improve the quality of the data. And this because, as I said, national accounts are compiled using many different data sources. The fact is that these data sources do not become available all at the same time, but they are updated at different times. So whenever new data sources become available, the national accountants will take them into account to improve their estimates. Here in the slide, you see a typical calendar of national accounts revisions. So normally, the production starts with quarterly estimates, which are then consolidated in annual estimates. And you can see that there are different rounds of annual estimates that are improved as time passes. National accountants normally consider the data as definitive after 3 years, although there are some caveats to that. The big question arises, should we revise data to improve their quality or keep the information stable? Actually, there is a trade-off between the two needs. The solution that has been found, so the users definitely appreciate better data quality. So they agree that the data should be improved. To reduce the impact of the revisions, national accountants publish and clearly communicate in advance a calendar of revisions, where they state what will be changed and when, so that no unexpected revisions happen. I said that data can almost never be considered as finally definitive. This because regularly national accountants re-benchmark their estimates. Normally this is done every 5 years, more or less. This is the practice followed in Europe, for instance. A benchmark revision consists in focusing on 1 or 2 years and trying to improve those data for those years as much as possible, going farther in and as deep as possible in the use of all the possible data sources and refining methods, etc. And then applying the results obtained for this benchmark years to previous years to obtain better time series. Normally the benchmark revisions bring big jumps in time series, big changes. And they are very burdensome, of course, so they cannot be carried out every year, and also for stability reasons. In Europe, we have an agreed policy for benchmark revisions. I said it's every 5 years. And the idea is that all the EU member states carry out the benchmark revision of national accounts at the same time, so that the big changes happen at the same time for all countries. The previous benchmark revision was applied in 2019, and the next one is scheduled in 2024. Last but not least, I would like to spend a moment on data sources. As I said several times, national accounts normally use a huge number of different data sources. Whenever they see value in a data source, they will use it and take it to compile the accounts. These data sources can be of several different natures. In these slides, you see the 4 main types of data sources. The information may come from enterprises, businesses, through surveys and accounts. So, for instance, the business register provides information, basic information about enterprises, and are used then to design business surveys. A second big group of data sources is the balance of payment and trade statistics, which provide information in particular on the flows between our economy and other economies. A third big group of data sources is household and price surveys. From households, for instance, through ad hoc surveys, we collect information about households' labor market situation, or about how they use their budgets and their amount. And we also need good information on price. We've seen many times that price are key elements for the compilation of national accounts. Last but not least, national accountants use a lot government's records, administrative information. The government is a major economic actor. It interacts with basically all the actors of an economy, and so it has a lot of valuable information that can feed into the accounts. Of course, it is in the interest of national accountants that these data sources are as consistent as possible from the beginning. So, for instance, if these data sources use a common classification, for instance, a classification of economic activities, it is in the interest of national accountants that these data sources use the same classification. and national accountants will try to convince the statisticians that work on the individual domains to adopt their own classification, because it makes their life easier. And in the end, if national accountants do not like the input that comes from the basic sources, because, for instance, they are not consistent with each other, or because they feel that there are holes or gaps, then they will amend the sources and impute to make the results of the national accounts more coherent and consistent. Of course, the producers of the basic statistics are very suspicious of what the national accountants do. We have arrived at the end of this module. Before leaving you, I would like to quickly recap what we have touched upon. I have given you a brief history of national accounts from the origins until the current system of national accounts. We have touched upon the relation between the system of national accounts and the European system of accounts. We have seen the key features of national accounts, the limits of the economy, the economic actors, and the transactions that happens among actors. We have considered the issue of revisions, and we have had a first impression of the main types of data sources that are used to compile national accounts. I invite you to follow the subsequent modules of this course on national accounts, and I thank you for your attention.